Hello to everyone and welcome to Energy Capital News. I'm Anna Tafoya and today I'm with Summer Robbins, founder and chief executive officer at Our Energy Manager, and Christine Spiro, energy and sustainability manager, also at Our Energy Manager. Summer and Christine will talk with us a little bit about their energy investment forecasts in a post-2020 scenario. In your opinion, which were the most critical COVID-19 consequences for the energy industry and more specifically for investment?
What we've seen, demand and basically the really falling off of demand in certain areas in energy was one of the biggest observations we saw that was a critical consequence. You saw a shift in usage, you saw a shift in wear from commercial to residential, so you saw shifts in peak times and people started working remotely. And the other thing that you've seen with demand shutting off is that companies were already thinking about energy exploration, thinking about curtailing investments and announcing they were going to cut investments and CapEx budgets in 2020. And that just kind of accelerated it.
We also saw from a market standpoint, here we have a demand that's really just kind of hit the floor, and supply and production that's been off the charts for the last few years. And so now you really had a shift in pricing on the market, which was interesting for those folks who were already hedged at the time. But definitely, those probably were those two noticeable things we saw, which was the demand decline and a supply oversupply.
Another question could be, do you foresee investors will pay attention to sustainability and reliability in 2021?
We've seen that shift over the last couple of years with clients starting to focus on sustainability, some because they wanted to, some because they were forced to based on the supply chain. Reliability hasn't been as much of a focus. You got to remember there's cost components to each, and most commercial industrials are going to bite one apple at a time. And so I can see sustainability, but I can also see the issues that will come through sustainability. The next issue will be reliability. So yes, I think they'll be addressed, but I think you'll see sustainability for 2021, reliability probably in 22.
And that's one thing too, that a lot of times reliability doesn't come up until you lose reliable access to energy. And then all of a sudden it becomes right at the forefront.
We're seeing it from the state level, from a public utility commission level. And we can talk about California and Texas in a little bit, but certainly if there's any good learning out there, it's look at the states that have gone, whole hog into sustainability and what ended up happening to those states. Now reliability is the big key word there. So I think you'll see the same progression happen in the commercial industrial space as you're seeing in the public utility side as we go forward.
In this regard, do you think sustainability will have this impact on future investments?
I think it will initially, because people are going to be, or companies are going to be sustainable for two reasons. It's reasons that most anything gets done, at least in the energy industry that I've seen, is it's mandated by the government or the agencies, or it costs, or it will either save them money or make them money. So it's the money and the compliance issues. So we'll see that because of so many states having sustainability, at least in the US, and initiatives where they need to be carbon neutral by 2050, if not sooner.
And in this regard, do you consider the energy transition is having or will have something to do with this trend towards sustainability and reliability? And if so, how do you think it will impact investment?
Anytime you talk about something new, you're always going to be talking about, what's the cost factor? Why are we doing it? Are we doing it because we have to be compliant, or are we doing it because we're being pressured to do it socially? I think those are the two things you have to consider in a transition period. And I think this transition period, it's been happening for a while. But now that we have a president or the president that will be coming into office that has some pretty aggressive goals. Now it's becoming, the top of the conversation that it probably wasn't in the last couple of years.
As you mentioned, Summer, about these other political factors or other factors, which are other factors you think energy investors will need to consider for the next year, and how can they prepare to invest wisely?
I think one of the things from an investment standpoint, when I'm talking about commercial industrials, often the thing holding them back is what's the cost and what's the payback on those particular projects. And so, I think commercial industrials are going to have to start getting more comfortable with longer payback periods for investment versus typically a good short investment for them is 3 to 5 years. They're comfortable in that space. Renewables and sustainability type programs, you're talking solar, you might be talking about a 15-year payback. So I think getting comfortable with those type of paybacks are going to be key to kind of getting over that threshold for commercial industrial customers.
And that may also open up the door to outside investment too. So if that's the stumbling block, then investors may come in and say, okay, well, we'll help. We will fund this in exchange for being able to supply you or some other form of incentive. So that might be something that investors look at when considering investments.
Christine and Summer, thank you very much for your time and your insights, which we're sure they'll be highly engaging to our audience.